How to enrich a country. Should the nations adopt free trade or protectionism? Well, let's talk about the trade protectionism today. I'm Saina. Welcome to Factstyle. Please remember to subscribe to our channel as well. Unlike free trade, which encourages imports with minimum tariffs, protectionism discourages foreign trade from entering the country by imposing high import tariffs. In fact, tariffs are just one method for enforcing protectionism. Import quotas and various government regulations can also restrict imports. So when do countries take protectionist measures? A country often wants to protect the local businesses or workers from foreign competition. By setting high tariffs or import quotas, restricting international trade can provide nascent local industries with growth opportunities, increase a country's trade balance, create more jobs, and even boost the GDP due to a rise in domestic production. Throughout history yet, it seems protectionism is always the first thing politicians can think of when an economic contraction comes to a head. For example, during the Great Depression in the 1930s, many countries abandoned free trade policies in order to stimulate economic recovery and increase employment. The U.S. Congress passed Smoot-Hawley Tariff Act, which raised import tariffs substantially, pushing trade protectionism to a high point in history. This law was sponsored by two U.S. politicians, Senator Reed Smoot and Representative Willis C. Hawley, and signed by then U.S. President Herbert Hoover in 1930. He raised the U.S. tariffs on over 20,000 imported goods. From sugar to cotton, from wheat to shoes, it covers a huge range of daily necessities. Even surgical instruments were taxed.
It was a frightening tariff. It did cut trade in the U.S. by half with foreign nations. So it had a dramatic effect at a dramatic time when the stock market was also falling by more than half. So there was trouble in the U.S. economy. The stock market had crashed, and Smoot-Hawley made it all worse.
What a dramatic effect was this act's passage prompted retaliation tariffs by negatively affected trading partners, which negatively led to a huge reduction in exports and imports during the Depression. For example, right after the 1932 Ottawa Conference, the British Empire established a limited tariff zone within its members, while maintaining high tariffs for the rest of the world. This was called the imperial preference on the principle of home producers first, empire producers second, and foreign producers last. Along with other major countries drastically raising tariffs, international commerce during the Great Depression plummeted. The result was a standstill in world trade and a social crisis. What's even worse, the whole world was left suffering the consequence of trade protectionism. It has almost become a consensus among economists that Smoot-Hawley tariff worsened and deepened the Great Depression. During the 1970s, Germany and Japan began to rise. As beneficiaries of free trade, these two countries, the U.S. perceived them as a threat to its hegemony. In 1971, for the first time in that century, America developed a trade deficit of $2 billion, which soared to $6.4 billion 1 year later. By 1968, Japan's economy had become second only to the U.S. From the 1960s to the 1980s, it had one of the world's fastest economic growth rates. Japanese cars, TVs, home appliances, and all other top-quality consumer electronics flooded the American market. In 1984, its trade surplus with America stood at $37 billion. Japan's economic boom was also evident through a series of go-go acquisitions of U.S., all those big names, all those trophy assets in the 1980s. Firestone Tire and Rubber, Columbia Pictures, the Hyatt Regency Hotel in Chicago, and all those plum real estates. The most notable acquisition was Mitsubishi Estate Company buying Manhattan Rockefeller Center, which made a New York Times front page on October 31st, 1989. The U.S. media dubbed this acquisition the Japan in America, or the economic Pearl Harbor. Two severe energy crises also gripped the 1970s. The 1973 oil embargo led by Saudi Arabia and the 1979 energy crisis due to the Iranian Revolution.
We have at present an absolute shortage of natural gas. We cannot produce as much as we can use, as we are equipped to use in our homes and our factories. This situation is destined to continue indefinitely. And by indefinitely, I mean not only just the next few years, but as far ahead as we can see.
Believe it or not, at the height of the 1973 oil crisis, hundreds of thousands of Americans lost their jobs. And remember the trend we mentioned at the very beginning? When there's a serious economic contraction, political sentiment leans toward protectionism. This was especially true in America. The U.S. passed the Trade Act of 1974 to protect the local industries and mitigate economic downturn and the trade deficit. Section 301 in particular reflected a shift away from free trade. The sentiment also escalated U.S.-Japan trade friction. In terms of industries involved, expanded from manufacturing sectors such as textiles, agricultural products, semiconductors, auto parts, to service industries such as aviation, finance, and construction. The U.S. also attempted to restrict Japanese car exports. Due to its heavy dependence on the U.S. for national security, Japan agreed to limit the number of cars it exported to America. After President Ronald Reagan took office in 1981, the U.S. started reducing the trade deficit by pressuring Japan to open its market to American companies. In 1985, 5 countries, the U.S., West Germany, France, UK, and Japan, signed the Plaza Accord. It is an agreement to depreciate the U.S. dollars against the Japanese yen, German Deutschmark, and 2 other currencies. These help the U.S. increase its exports and lower its trade imbalance with Japan and certain European countries. 2 years later, Washington imposed 100% tariffs on $300 million worth of Japanese imports. This move effectively blocked all these products from entering American market. But that didn't change the story's ending. Despite 50 years of U.S.-Japan trade friction involving steel, home appliances, automobiles, telecommunications, a dozen significant areas, from light and heavy to high-tech industries, the U.S. trade deficit with Japan has not been reversed. Even in 2019, after so much interference, the U.S. still has a trade deficit of $69 billion with Japan. But during the U.S.-Japan friction, American consumers, they have to pay much higher prices for products of the same quality. What is even worse is that all these high tariffs were imposed against a backdrop of oil shortages and job losses. The 1970s energy crisis dealt a heavy blow to the development of many Western countries, particularly the U.S., Canada, Western Europe, Australia, and New Zealand. They all faced substantial petroleum shortages and elevated prices. The annual U.S. inflation rate in the U.S. surpassed 11% in January 1981, and all other Western economies affected by energy crisis weren't looking good either, triggering a new round of protectionism. These all resulted in the early 1980s recession, which affected much of the world. Yet history tends to repeat itself. Former U.S. President Donald Trump imposed multiple rounds of tariffs on over $500 billion on Chinese imports, marking the beginning of the China-U.S. trade war. 4 years have passed, and the U.S. trade deficit with China has not declined significantly, but it is nonetheless struck in one of its most severe bouts of inflation, reaching 9.1% in June 2022. Protectionism did not help to mitigate inflation, but rather contributed to the high prices that consumers they must bear every day. As economists have warned, applying protectionist measures can only give rise to, let's say, technological stagnation, increased prices, economic isolation, and high consumer costs. They are, in fact, sophisticated economic policies that must be applied with great care, rather than political tools to manipulate allies or bash rivalries.
There seems to be a lot of issues focusing on politics. And usually politicians get captured. If you look at many areas, you find that politicians are captured by particular interest groups. So they do not necessarily focus on what is good for markets.
This is why Professor Khamenei has argued that politics should not take precedence over economics. Protectionism is literally about protecting certain companies, products, or industries. It has to be niche targeted. Widespread protectionist measures only harm the real GDP growth, cost jobs and income for millions of citizens, and injure general social welfare. That's why, given the cost to everyday Americans and harm to domestic production and international trade, many U.S. experts have constantly called on Biden administration to drop some of the billions in tariffs on China. President Biden is reportedly now considering lifting some Trump-era tariffs on Chinese imports. Removing these tariffs would certainly help relieve the pinch on American consumers and facilitate global commerce. In fact, we should always bear in mind that the fundamental principle of international free trade is reciprocity. It influences economic interactions between countries and it works both ways. In most cases, strong protectionism only spurs tit-for-tat retaliation, and only cooperation can prompt win-win collaboration. Alright, that's it for today. Thanks for watching. If you like our show, please remember to click like and subscribe. And also leave your comment down below and tell us which are the topics you want us to discuss. I'll see you guys next time. Bye for now.